Welcome to the Big Money Questions Show. I'm Rachel Rickard Straus, Personal Finance Editor at This Is Money. This week, it's 10 years now since the financial crisis. Will there be another one, and what will be the trigger? We're lucky enough to have Jim Rickards here to talk us through it. He is the New York Times bestselling author of Currency Wars and also Road to Ruin. Jim, thank you so much for joining us.
Thanks, Rachel. It's great to be with you.
First of all, 10 years since the last one. Is there another on the cards, do you think?
There's definitely another one in the cards. Unfortunately, that's always the case. The 2008 financial crisis, the global financial crisis, was the most severe since the Great Depression, but it wasn't the only one. 1998, we came very close to shutting down global capital markets. That was started in Asia, went to Russia, ended up at Long-Term Capital Management. I actually was their counsel. I negotiated that bailout, so I had a front row seat for that one. But we came within hours of shutting every market in the world. 1994, the peso crisis. 1987, the U.S. stock market fell 22% in one day. That would be the equivalent on the Dow Jones Index of 4,000 Dow points, not 400, but 4,000. So we've had these shocks before, but 2008 was the worst. So yes, I think we can fully expect another one just based on history.
So there's something inherent in the system that means that we are to expect every what's the cycle? People say 7 years or so?
10 years, something like that. That's exactly right. And it's just, these are complex dynamics. Capital markets are a complex dynamic system. And that's not the model that Wall Street uses, by the way, or central banks or Wall Street or financial or the city. They all use these equilibrium models and regressions and certain statistical methods that really don't match up very well with reality. What does match up well with reality is complexity theory, which has been used in many other fields, physics and seismology and, as I say, meteorology in a lot of fields, has not been widely used in finance. I'm one of, not the only one, but one of the people who's applying complexity theory to finance. When you look at it that way, it all becomes a lot more clear. But here's the problem. In 1998, the Wall Street had to get together to bail out a hedge fund. In 2008, the central banks had to get together to bail out Wall Street. In the next crisis, 2018, perhaps sooner, who's going to bail out the central banks? In other words, yes, we've had a succession of these crises, but each one is bigger than the one before. Each bailout is more difficult than the one before. We're now at the point where the next crisis will actually exceed the capacity of the central banks to save the day.
So we've always found a solution in the past, but as it gets bigger, perhaps there won't be anything open to us this time round, you're saying. And also, we haven't really built ourselves up back to where we were at all to be able to cope with this next crisis.
Well, that's correct. I mean, there is one balance sheet bigger than the central banks that's clean, that could bail out the system, which is the International Monetary Fund. But now you're talking about world money. You're talking about casting the IMF in the role of the world central bank, and they have their own money, the special drawing right, or SDR. So Bank of England can print sterling, and the Federal Reserve can print dollars. The IMF can print these special drawing rights and bail out the world with that world money. That's an extreme solution, but that might be the only solution available to us. But as far as the safety of this system is concerned, one of the scariest things I've heard recently, Janet Yellen, our chairman of the Federal Reserve, said that the system has become so safe in the 10 years since the crisis that she doesn't expect another crisis in our lifetimes. Those are her exact words. Of course, I thought of back to Neville Chamberlain coming back from a meeting with Hitler and saying, I brought us peace in our time. That didn't work out so well. And
it's always seen as the thing to be nervous of, to look out for, the moment at which someone with great authority says everything is fine.
Correct.
It's going to be fine. End of boom and bust. Greenspan talking just before the crisis in 2007-8, saying everything's fine then as well. It's at that point that people get a little bit on edge.
That's exactly right, and that was my first thought. I said, if she says we're not going to have a crisis, then the other one must be right around the corner. But again, going back to these complex dynamics, it's because the system grows up, and it's like a sand pile. This is a classic experiment. You build up the sand pile, and then one grain of sand causes the whole pile to collapse. You don't know which grain of sand, and you can't really blame the grain of sand, or in the case of an avalanche, a snowflake. It's really the dynamic instability of the system. But that's where we are. And I think for everyday investors today, everyday savers, people are too complacent. They had a certain level in 2008. They lost probably half. That was a shock. It's clawed its way back. You're now at, stock markets anyway, are at higher levels than they were in 2008. But a lot of the gain, the doubling or the tripling since then was just recovering these losses. Now they're onto higher ground, but people are complacent, and what they should expect is the opposite. They should expect another drawdown because that's how markets actually operate. The question I get asked a lot, Rachel, is okay, I understand that, theoretically, but what's the catalyst? When is it going to happen?
What's the snowflake, your
Exactly.
grain of sand?
Exactly.
So
right.
what do you think it will be?
Well, normally I answer that question by saying, well, it kind of doesn't matter because if it's not one snowflake, it'll be another. It could be a bank failure, it could be a failure to deliver physical gold. There are a lot of things it might be, but for the first time, and literally as we're speaking in real time, you can see what it will be. It's something that the market hasn't priced in, which is a war between the United States and North Korea in the next 6 months. Now, I know that's sounds like an extreme statement. That's no snowflake. That is the avalanche causing a bigger avalanche. And I don't say that lightly. This will be the most horrific war, bloodiest war at least since Vietnam, perhaps back to the original Korean War, in some ways the conclusion of the Korean War, which reached an armistice in 1953, but never a peace treaty, so that war is still technically going on. And one of the reasons I say that, there are a lot of dynamics behind that. I think listeners or viewers are familiar with Kim Jong-un firing intercontinental ballistic missiles over Japan, testing an H-bomb now exponentially larger than the atomic bombs he had earlier. And that's significant because with an atomic bomb, if you want to kill millions of Americans, you have to sort of stick the landing, you have to hit the target. With an H-bomb, you don't. You just have to come in the general vicinity. It can be detonated high in the atmosphere, create what's called an electromagnetic pulse, wipe out the power grid in the United States. That would cause civilization to collapse within 3 days. This is an existential threat to the United States. That's well known. His behavior seems erratic, but his view is, I'm safer with these weapons programs than without them, because looking at Gaddafi and Saddam Hussein, people who gave up their programs, the U.S. later invaded and they were both killed. Kim Jong-un's saying, well, if you give up your program, the U.S. invades you and kills you, but if you keep your program like the Iranians, they won't mess with you. So
you're seeing it almost as a kind of defensive move, this what looks like something that's very retaliatory and aggressive actually is defensive, because the alternative, you can see all around the world what's happened with other global leaders who have had nuclear weapons.
Correct.
You've got to hold on to them, or the worse for your country certainly is.
Yeah, the conventional wisdom is, why is he doing this? Doesn't he know that he risks an attack from the United States? But that's not how he thinks about it. He says, if I give up this program, the U.S. will attack me as they've done with others, but if I keep the program, they won't mess with me. He actually feels safer from a regime point of view with the weapons than without. He's in what's called breakout mode. Breakout mode, when you have these covert programs or secret programs, you do baby steps and you try not to get caught and everything's subterranean, but the U.S. slaps you down every now and then they come back. This is completely different. He's decided to go for it. He's testing things as quickly as he can. The tempo is picked up. He's not in this for negotiations. He's not in this for sanctions relief. He's going to get these weapons and secure his regime. From the U.S. point of view, it's an existential threat for the reasons we mentioned. So this is what the French call le logique de guerre, meaning the logic of war. It's different than the logic of diplomacy or business negotiation logic. Kim Jong-un sees the U.S. as an existential threat. We see him as an existential threat. There's a collision course here. Now, that's sort of game theoretic. There's a lot of evidence to back that up. But just today, U.S. Secretary of the Treasury Mnuchin made a statement that told me we're on a path to war. He said in an interview on a financial network that if China, because the UN just passed new sanctions on North Korea, he said if China does not enforce the sanctions, the U.S. is prepared to deny China access to the U.S. dollar payment system. In financial warfare terms, that's the equivalent of an H-bomb.
Okay, break that down for us, because that's quite a lot of different issues going on there. We've got why are we talking about China all of a sudden, right. and what is it with the US dollar, and how is this all feeding into sanctions?
90% of North Koreans trade, and a lot of their hard currency dealings run through Chinese banks. The Chinese banks front for the North Koreans in illegal ways, but the Chinese don't care. So this is how China gets hard currency that needed to buy the technology to develop the weapons. So
North Korea.
North Korea. So we're relying on China. The U.S. is relying on China to choke off the North Koreans financially so they cannot continue this weapons development. The Chinese have not cooperated. They pay lip service. They voted for the sanctions in the United Nations. These new sanctions are very weak, by the way. But what the United States is saying is, you, China, have to live up to those sanctions, enforce those sanctions, put the stranglehold in effect on North Korea. If you don't, we'll put the stranglehold on you. We'll deny you access. Now, the U.S. dollar, love it or hate it, it's 60% of global reserves, 80% of global payments, and about 100% of the oil market. And of course, China is dependent on oil. And China has 1.4 trillion of U.S. Treasury securities. So when you say to China, which the Secretary did, this isn't inference, these are his exact words, we're going to deny you access to the dollar payment system, you're talking about freezing all of the Chinese Treasury, over $1 trillion of their reserves, freezing $1 trillion of their liquid reserves, bearing in mind a lot of their reserves are illiquid. Now, I dare say the U.S. wouldn't steal the money. We would just say, we're going to hold it for your future benefit, provided you're on your best behavior. We'll keep it in an escrow account. It's a little bit of a finesse, but in effect, it would be a selective default on the U.S. Treasury market. That's what the Secretary of the Treasury said.
So that's very serious. For the US to say to China, we're going to take those sorts of steps, that the stakes are that high with North Korea, that we are so dependent on your participation here, that we would cut you out of these markets altogether, which have an impact on, an incalculable impact on China if it doesn't have access to that money, that funding, that way of buying oil on which it's so dependent. So what does it mean that the stakes are this high, that such a statement would be made?
Well, it's a great question, Rachel, and that's the point. What stakes could be higher than freezing China out of the dollar payment system? Well, the answer is war and peace. In other words, unless the U.S. had made a tentative decision to go to war, we wouldn't be talking about extreme financial warfare with China. If the U.S. has said, we're going to acquiesce, as Steve Bannon famously said, they got us. Of course, Steve Bannon's no longer in the White House. This might be a reason. But a lot of people take the view, certainly foreign policy elites, members of the Council on Foreign Relations, the Davos crowd, they take the view that, well, it's too bad that North Korea is going to become a nuclear power, but the war is too horrific. You can't really do anything about it. It's too late. The U.S. doesn't take that view, not inside the White House. They take the view that we're going to stop this. This is an existential threat. So when the stakes are that high on the military side, they have to be equally high on the financial side to prevent the war from happening. So my inference, and I think it's a good one, and this really goes to your question, Rachel, the U.S. would not have taken such an extreme financial war posture vis-a-vis China unless we were prepared to go to war with North Korea.
So really, that sentiment today, that speech, was last ditch. That you couldn't get any more powerful on the financial side with
Correct.
dealing with the situation.
Right.
Once you've expended all of that, what is left? It's war.
Correct. The U.S. has a whole basket of financial sanctions. We can freeze an individual bank, an individual account. We can impose tariffs or sanctions here and there very selectively, which we've done with Russia and Syria and Iran, and we've fought a financial war with Iran in 2012. But this is extreme. Kicking you out of the dollar payment system is the financial equivalent of an H-bomb, financial equivalent of nuclear war. These are the scenarios I talk about in my book, Currency Wars, where we actually did a financial war game. I facilitated one for the Pentagon. We had participation from the Treasury and the Fed. These are the kinds of scenarios you get into. So that's exactly right. You wouldn't go there to that extreme on the financial side unless the alternative were extreme on the military side, which it is. And then the question is that priced into markets? And the answer is absolutely not. And this is where everyday investors and savers are at risk. They're relying on Wall Street, they're relying on the city, they're relying on their wealth managers and their financial advisors to guide them, their retirement savings, maybe their parents' health care, their own health care, their children's education. And this is not priced into the markets at all. So people need to be ready for a shock.
So we keep seeing this, don't we, that markets continue to go up, and every now and again there'll be a little blip, because perhaps we'll see it, North Korea will have done something overnight, the US, the markets open in the UK,
Right.
and there'll be a slight dip, and then they'll go up again.
Right.
But as we were talking about before, it seems to me that war is sort of binary for markets. If we're talking about nuclear war or a war on that scale with North Korea, you can't have a little bit of war, a little
Correct.
bit of all or nothing.
Right.
So you can't really price it into markets. How on earth do you value something like that? Either you think it's going to happen or you don't think it's going to happen.
Right.
And it seems that as markets continue to go up, the logic of investors must be that they don't think it's going to happen.
Right. This is one of the failings of modern financial theory. There are many, too many to discuss in one interview. But the idea that markets are efficient, that they incorporate new information smoothly, the prices smoothly and continuously adjust from one level to another, all those notions are false. The fact is, markets go along, they're oblivious, and all of a sudden, boom, they're up or down, as the case may be. They have these very quick radical reactions to new news. So that's what the market is vulnerable to. So, but that doesn't mean that an everyday investor or everyday saver has to be subject to that. You can do things right now. I do them. I would certainly recommend others. You know, lighten up on your stock portfolio. I know the market's been going up. It's painful to watch other people making money, but increase your cash position, increase your physical gold position, maybe your high-quality long-term government debt, you know, gilts or 10-year Treasury notes. These are things that will serve you well. These are the safe haven assets. When the war breaks out, and I would expect this before the middle of 2018, this is not a 3-year problem. This is probably a 6 to 8 month problem.
Come and talk to us in 6 to 8 months.
I'll come back.
And we'll see where we are.
We'd love to, yeah.
So that's interesting, because the way we've been talking, it sounds pretty Armageddon. And I would worry that, you know, viewers might have got through the first bit of this interview and quickly run off and sold everything that they have.
Yeah.
But you're saying, no, it's not that extreme. It's just you need a little bit of a kind of buffer, a little bit of insulation from this, and with things that are seen as safe havens, so cash and gold.
Gold, and I think you know, high quality government bonds, not junk bonds, but you know, gilts and Treasury notes. And by the way, you know, don't take it from me, Warren Buffett, the most famous investor alive, currently has $100 billion in cash. He owns stocks and he owns companies, he owns a lot of other things, but $100 billion in cash. That's a sure sign that he sees something extreme coming. I don't want to put words in his mouth. I'm not saying he would agree with my North Korean analysis, but you don't have $100 billion of cash unless you expect a major market drawdown. And Buffett's famous for going out in the wreckage and picking up bargains, and it looks like he's getting ready for that again.
Okay, so it's 10 years since the crisis. I thought it would be an interesting thing to talk to you about what might trigger the next one, whether there's a next one on the cards. It seems like it's a lot closer and a lot more serious than certainly the markets, than investors have been predicting.
Correct. As I say, I'm asked the question a lot, and I write about it and talk about it. I'm always prepared to discuss the next crisis, but it's very hard to pick a specific catalyst. There are many on the list. Pick a specific catalyst and specific timing. But now I think for the first time in 10 years that I've been writing about this, I think you can do that. You can say that the catalyst is North Korea and the timing is the next 6 to 8 months.
Okay. Gosh. Jim, thank you so much for talking us through that, and thank you for joining us for the big money questions.